Hey everyone, and welcome. Today, we are diving deep into the triangle of wealth: gold, Bitcoin, and real estate. But listen, this isn't just a simple asset comparison. We're actually exploring three completely different philosophies of what money and value itself really are. It's the big question, isn't it? Building wealth. I mean, we all want to do it, but where do you even begin? Whether you're trying to protect what you've got or grow something new, the choices can feel, well, pretty overwhelming. So let's break down three of the biggest players in the game. Okay, so here's how we're going to look at this. Forget a boring comparison chart for a second. Think of these as three different characters in your financial story. Each one has a totally unique personality, its own strengths, its own weaknesses, the whole shebang. First up, you've got gold. This is the protector, the old guard, the ancient guardian that's been around for, well, literally forever. Next, we have real estate. This is the builder. It's the one you can actually walk up to and touch, the literal foundation that so many fortunes are built on. And finally, rounding out our trio, Bitcoin, the pioneer, the wild card, the digital disruptor that's charting a brand new and pretty unknown frontier. All right, let's get into it, starting with our first character. You have to understand, gold is so much more than just a shiny metal. It's really an idea that has survived for thousands and thousands of years. I mean, think about it. For centuries, across countless civilizations, people have always turned to gold as a form of money. Its entire reputation is built on this incredibly long, stable history, which is exactly why it's seen as the ultimate safe place to put your money when things get chaotic. So what's its secret sauce? Well, it boils down to a few key things. It lasts forever. It doesn't rust or fall apart. There's only so much of it on the entire planet. And here's the kicker. Governments can't just hit a button and print more of it. It exists completely outside of that system. Honestly, this is the best way to think about gold's job. It's like a financial insurance policy. You don't buy home insurance hoping your house burns down, right? Same idea. You own gold to protect your wealth in case inflation goes crazy or the economy hits a wall. And that really gets to the fundamental trade-off. Gold is all defense, no offense. It's not going to send you a dividend check in the mail or pay you rent. Its one and only job is to hold its value over the long haul, not necessarily make you rich. Okay, let's switch gears and move on to character number 2, the builder. This is the one you can see, you can touch, you can even live inside of. We're talking about real estate. So, unlike gold or Bitcoin, real estate has this inherent real-world usefulness. People will always need a place to live, and businesses will always need a place to operate. That fundamental human need is the bedrock of its value. So, how does it actually build wealth for you? Well, it's got this awesome 1-2 punch. First, it can give you a steady stream of cash from rent. And second, the property itself can go up in value over time. It's like having two engines working for you at once. But here's where it gets really interesting. Its superpower is something called leverage. Okay, just imagine you saved up $50,000 to invest. Now, with that 50 grand, you can go to a bank and they'll loan you the rest, letting you control a much, much bigger asset. So all of a sudden, your $50,000 is controlling a $500,000 property. And here's the magic. Any gains aren't on your investment, they're on the full value of the house. It massively amplifies your potential returns. It is an absolute game changer. Of course, there's no free lunch. That leverage, it's a double-edged sword. It can amplify your losses just as easily as your gains. And then you have all the real-world responsibilities: repairs, taxes, difficult tenants. Oh, and you can't just sell a house in 5 minutes. It can take months. It's illiquid. And now for our final character, the one that's rewriting all the old rules. Bitcoin isn't built on rock or history. It's built on nothing but pure, unchangeable digital code. So what actually backs Bitcoin? It's not a government. It's not a vault full of gold. It's really a modern combination of things: the security of its technology, the collective belief of millions of people who own it, and the power of its network, which basically means the more people who use it, the more useful it becomes. But its core feature, the very reason people call it digital gold, is its absolute scarcity. There can only ever be 21 million Bitcoin, ever. That hard cap is literally written into its code, and it's impossible for anyone to change. And this absolute scarcity leads to one of the fiercest debates in finance. On one side, you have supporters who see it as the ultimate protection against governments printing endless amounts of money.
On the other side, critics argue that, just like gold, it doesn't produce any income, and its value is based purely on what the next person is willing to pay for.
And that brings us to its defining characteristic, extreme volatility. The price swings, both up and down, can be absolutely breathtaking. And that's the deal, right? It offers the potential for extraordinary returns, but it comes with an equally significant amount of risk. So, after meeting our three characters, who wins? Which one is best? Well, hold on a second. Maybe that's the wrong question to be asking. What if they aren't even competing for the same job in your portfolio? Let's just lay it all out side by side. Gold's primary role is to protect your wealth. Its biggest strength is its history and stability, but its biggest risk is just stagnation. Real estate's role is to build wealth. Its strength is leverage and income, but its risk is debt and the fact that it's hard to sell. And Bitcoin? Its role is speculative growth. Its strength is that digital scarcity and huge upside, but its biggest risk is that wild volatility. You see? They each have a different job to do. Ultimately, the choice isn't about which of these assets is the best. It's about which one aligns with your goals, your tolerance for risk, and your vision for the future. So are you looking to protect, to build, or to pioneer? That's the real question.